This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Mark Magnuson.
Hello and welcome into Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Mark Magnuson. Today is Monday, December 4th, 2023, and we're so glad you could join us for today's show. In today's episode, we have the latest edition of Between the Pods. I will be joined by Mike Steenhoek. He is the Executive Director of the Soy Transportation Coalition, and a lot to talk about with Mike coming up in today's show. We also have a check of the ag weather outlook, but first, let's run down the closing markets.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
At the end of another trading day, we are joined now by Robin Schmahl of agmarket.net for our closing analysis. Robin, what did we see take place in the grains?
Well, overall, we had a mixed in corn, mixed close. We had pressure on the whole soybean meal contact, or soybean complex, I should say, both soybeans, meal, and oil. Not so much on oil or meal, but soybeans had more struggling, and wheat was higher. So we had kind of a mixed bag across the board. Now, initially, the export inspections were somewhat mixed. They were a little bit more negative on soybeans, wheat, but that really didn't seem to play in a whole lot in the market. Corn was at 45.6 million bushels. That was up 29.5 million bushels from last week. That may have provided a certain level of support in the corn market. Soybeans at 40.7 million bushels, down 17.1 million bushels from a week ago, and wheat at 6.9 million bushels, down 3.7 from a week ago. So wheat was a little bit more on the negative side. But we did have daily export sales that were recorded. Soft red winter wheat of 440,000 metric tons went to China. And that was one of the reasons why we saw some really nice strength in the wheat market. 267,044 metric tons of corn went to Mexico, and 83,000 metric tons of soybean meal and cake went to Philippines. So we had some nice daily export sales that came across on the books. Now, Ag Rural cut Brazilian soybean crop to 159.1 million metric ton. That was down 4.4 million metric ton from their previous estimate. But that didn't really provide any support to the soybean meal market, because traders seem to be more focused on the potential for some rains in mainly the central Mato Grosso area of Brazil, a little bit to the north. Now, there's some dryness right now, but later in the week, a cool front comes in can open it up a little bit more for some rains. Now, you have to take that with a grain of salt, because we've seen this a couple of times and it hasn't really materialized, but the trade seemed to be fixated on that, at least for today. And they were under pressure on Friday as well on that possibility. We'll see how that all comes about. Now, we had 83% of the soybeans are planted in Brazil versus 93% a year ago. So we're still running behind on that. That is creating some implications for, their planting decisions that are being made, because previously there was some corn that was sent back because they were going to look at not planting a second crop corn in some situations. We'll see how that all pans out. Now, StoneX cut corn crop estimate in Brazil to 161.9 million metric ton, down from 165.03. So they cut a little bit of that based on the weather situation. Second crop corn, they lowered to 7.33 metric ton, down from 98.96. Now, we didn't even get close to planting the second crop corn, but they're trying to make an estimate based off of that. So that probably provided the other part of the support to the corn market, relative to strong export inspections and a nice sell to Mexico over the weekend. Now, soybean crush in October totaled 201 million bushels. It was in October, that was up 26 million bushels or 14% from September, and soybean oil was 2.38 billion pounds, up 14% from September. And Stats Canada today also, they came out and said Southwestern Argentina, I'm sorry, I'm not Stats Canada, Southwestern Argentina wheat output, their estimate is down 27% due to dryness. And Russian wheat prices are rising. And then there's been some really bad weather in the Black Sea area, and that provided another area of support to the wheat market, other than the big sale to China and some cut in the crop estimates.
All right, Robin, let's switch over to the other side of the ag marketplace in the livestock complex. Wasn't very pretty there last week. Any improvement here today?
No, not really much improvement. So on the cattle side, it was anticipated there might be some follow through, and it did follow through. Now, we did make a valiant effort earlier in the morning to really bring the live cattle back, but that fell apart over time. Live cattle ended up breaking support from back in the March support level. So that's pretty significant. We've fallen back all the way to that period of time. Now, follow through selling pressure did keep it lower all day. Now, we had weakness of cash last week, anywhere from 2 to 4 lower in the cattle market, both on the live and the dressed beef. Now, with this decline here, it's anticipated that packers are going to use that to their advantage. And obviously, they're going to bid lower, hoping that the feedlots might be more anxious to move cattle rather than waiting and maybe seeing some more decline. So they're going to try to use that to their advantage. Now, box beef is not doing very well either. The midday box beef prices, we were $1.82 lower in choice, $1.63 in select. There's been a real concern over that demand. We haven't seen demand materialize as much as was anticipated throughout the month of November. Now we're moving into December, and the market has fallen and adjusted accordingly. The market again has shown us that it falls faster than it goes higher. Now in the hogs, December was under pressure. December has a little bit over a week to trade, and that's going to stay closer to the index, the underlying cash calculation. But it seems like traders are wanting to close the chart gap that remains only in the April contract. They didn't quite do it today, but it almost seems like that's maybe what's really holding the market up, because the cash in the hogs isn't all that exciting. The daily direct price this morning was down 57 cents. We're looking at a weighted average of 57 or 56.22. Pretty low. Now, we did see cutouts up $1.70 at the noon print, but they were down on Friday. And the cutouts have been very variable. Now, packer margins are better than last year and better than the 3-year average. So there's some anticipation that maybe they might be a little more willing to step up to the plate to purchase hogs, but not if they're just continually available. And we saw a significant increase in the hog weights last week over the previous week and over the year. So they may not have to come in there and be very aggressive, but the anticipation's there. And the technical anticipation, I think, of closing that chart gap is really what buoyed the market today. But going forward here, there might be some limited upside in the hogs.
Lots to talk about here today, Robin. Thanks for keeping us all informed. What's the best way for our listeners to get in touch for more marketing information?
Well, they can call me directly if they would like at 877-256-3253, or go to our website, agmarket.net. The 844 number is there. Feel free to call, and somebody will pick up and help you.
He is Robin Schmahl of agmarket.net. Robin, thank you so much for the time today and have a great week.
All right, thank you and take care.
Thank you to Robin Schmahl of agmarket.net for our closing market analysis. It's time now for the closing numbers here on AMPM.
March corn up 3/4 cent at 4.85 1/2. January soybeans down 18 3/4 at 13.06 1/4. January soybean meal down $4.40 at 4.0830. January soybean oil down 21 cents at 51.24. Chicago wheat up 17 3/4 at 6.20 1/2. Minneapolis wheat up 6 even at 7.36 1/4. Kansas City hard red wheat up 11 even at 6.57 3/4. And March oats up 10 1/4 at 3.95 even. On the Merc, December live cattle down $2.02 at 167.25. January feeder cattle down $3.90 at 210.52. December lean hogs down 55 cents at 68.05. December pork cutout down 90 cents at 80.75. And Class 3 milk up 5 cents at 16.17.
And that does it for our closing market coverage here on Ag Matters PM on the Iowa Agribusiness Radio Network. It's time now to take a break to hear from our sponsor, the Iowa Soybean Association and the Soybean Checkoff. And when we come back, I will be joined by Mike Steenhoek. He's the Executive Director of the Soy Transportation Coalition. It's the latest edition of Between the Pods.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
You're watching Ag Matters PM on the Iowa Agribusiness Radio Network, and in today's show, I'm joined by Mike Steenhoek, Executive Director of the Soy Transportation Coalition. We talk about some of the recent challenges with moving grain, whether it's down to weather, lack of water, whatever the issues may be. Mike has the latest update for us on this latest edition of Between the Pods.
It's time to go between the pods with the Iowa Agribusiness Radio Network and the Iowa Soybean Association. For the next year, we will explore the ways Iowa-grown soybeans are making a difference at home and around the world. Now, here's your host of Between the Pods, Mark Magnuson.
Mark Magnuson for the Iowa Agribusiness Radio Network, and I'm joined today by Mike Steenhoek. He is the Executive Director of the Soy Transportation Coalition. We are at NAFB 2023. Mike, I know there's been a lot to talk about when it comes to moving grain, moving soybeans, and let's start with the Mississippi River, which we know was a problem last year at this time. Where are we at right now in comparison to that point where we hit some extremely low levels, some record levels?
Yeah, it continues to be a movie sequel that none of us want to watch. You know, with the low water conditions we had last year, historically low, we're seeing that repeat this year. A few weeks ago, we had some precipitation throughout the Midwest that resulted in water levels rebounding a bit. But subsequent to that, we've had really nice weather in terms of farmers finishing their harvest, but we haven't had a lot of precipitation to help recharge the soils and then also provide some water for the Mississippi River. So as a result, we're seeing water levels go back down, and we're actually at lower levels today than we were at the same period last year. Barge companies are having to respond by limiting the amount of freight that they're transporting per barge, 25% or more, and they're also limiting the number of barges they're attaching together to form one single unit. So at a point when we need our supply chain to be operating at full throttle, unfortunately that's not occurring.
So am I right as well that not only do we need the moisture for the river to become the levels to rise, but it also makes it wider, and that creates another opportunity for more traffic, doesn't it?
Yeah, you know, you've got the whole water depth issue, but then you also have the channel width issue. And so because you've essentially gone from a 4-lane highway down to 2 lanes, barge companies can't attach as many barges together to form one single unit. And that's where really the economic power of barge transportation is derived from. This ability to get a lot of freight in each barge, but then attaching a bunch of them together to form one single unit. That's what allows farmers in the middle of the United States, far removed from our coastal regions, to effectively compete on the international marketplace because we're so efficient via barge to get the product there. Unfortunately, we're seeing that the economics of barge actually diminish due to low water levels.
Now, back-to-back years with this problem, is this the start of an unfortunate pattern?
Well, you know, we obviously were seeing these weather-induced events actually occur, but in 2019, it wasn't that long ago, we had an abundance of water. We had widespread flooding, so that's one of the realities is things can they can be quite variable. And so the pendulum can certainly swing. So, obviously, one of the things that we do recognize is that once you have drought conditions get established, they are persistently stubborn. It takes a lot of precipitation to get us out of that. So we're obviously hoping for some abundance of moisture this winter and into the spring.
Let's move to Central America, where the Panama Canal is experiencing its own issues. And the reason for that, from what I understand, Mike, and I know all of this because Mike sends out a very helpful email with a lot of information from time to time, but it is a lock and dam system, or a lock system, and it is not at sea level. So you need to have the adequate moisture from the lake nearby.
Yeah, so because Panama is a pretty narrow country, you would think you could just build a sea level canal, which is essentially digging a trench and keep digging until the two oceans meet. But given the topography and how the country is quite mountainous, even though it's quite small and narrow, you have that kind of elevation that requires you to actually, instead of having a sea level canal, you have a system based on locks, which is essentially you have 3 stair steps up to the high elevation, 3 stair steps down to get from one ocean to the next. And for it to operate, you have to have an abundance of fresh water that allows that stair step process, the lock process, to actually occur. But you need to have sufficient amount of that fresh water in your reservoir. Unfortunately, that's not occurring. So the water levels at that reservoir are about 8 feet lower than it normally is. And so the Panama Canal Authority is having to respond in 2 ways. Number one is they're limiting the water depth for each transit, but that's mainly applying to the larger container vessels, LNG vessels, not the dry bulk vessels that agriculture is a part of. But what does impact agriculture more so is having the limit to the number of transits on a daily basis. So now what's happening is you're having this line or queue that's amassing outside the Panama Canal, and time is money. There's a daily charter rate to utilize these ocean vessels. So if you're all of a sudden having a longer wait, that's additional cost in the eventual delivered price to our customers. So it's one more example that drought can inhibit the ability to grow a crop. It can also inhibit the ability to transport that crop.
So even though we might not necessarily think that the Panama Canal could affect the price, it obviously does, because for our Iowa farmers, I would think of this in this terms. Mike, does this make sense that it's just harder to move that grain through the canal? So the cost raises, and that gets passed on down the chain, and then eventually it just costs more to move that grain.
Yeah, absolutely. 600 million bushels of U.S. soybeans utilize the Panama Canal on an annual basis. So we're one of the big customers of the canal. And, whenever you have a cost inserted into your transportation system, whether it's due to higher fuel costs or due to some kind of inefficiency like drought conditions with barge or the Panama Canal, a lock closure, whatever it may be, the question is, are those costs passed on to the customer? Are they absorbed by the shipper? Or are they passed on to the farmer in the form of a lower price at that point of sale or a more negative basis? And usually in agriculture, those costs are passed on to the farmer because if we try to pass those costs on to the customer will say, today is a good day to buy more from Brazil. And so you're really limited in your ability to, given the competitive nature of agricultural exports, you're limited in your ability to pass those costs on to the customer. So usually farmers are the ones that absorb that. So again, it's one of those issues when in terms of infrastructure, that farmers, it's one of those contributing factors to farmer profitability.
Mike, let's switch to a third topic here, and that is kind of in the Northeast and around the Great Lakes. The St. Lawrence Seaway had an unfortunate situation at the end of October where there was a strike and had to shut things down for a little bit of time, but I kind of picked up on your comments that it was a very quick resolution. It was just about a week or so, wasn't it?
Yeah, we've unfortunately had some of this tension between unions and management, and without taking sides, but it's sown more, uncertainty into our supply chain, and the St. Lawrence Seaway Great Lakes system was an example of that. So you had a strike for only a week, so fortunately it was very short-lived, but it just kind of reinforces that for supply chains to really work, you have to have predictability, you have to have reliability, and when you have that kind of uncertainty due to stoppages or strikes, it really calls that into question. Fortunately, it's been short-lived, and so now we kind of resume our efforts to really promote the Great Lakes St. Lawrence Seaway. It will never be comparable to the Mississippi Gulf or the Pacific Northwest in terms of what we're sending to the international marketplace. But I think really the key is, how can we look at each of our launching points for our exports and increase their competitiveness. And the Great Lakes St. Lawrence Seaway is one of them. So we recently made an investment, a $200,000 investment by the Soy Transportation Coalition to a facility that's expanding at the Port of Milwaukee so that they can export soybeans and soybean meal. And fortunately, they also received a $9.3 million grant from the U.S. Maritime Administration, so that the company, the DeLong Company, is actually expanding their facility at the Port of Milwaukee so they can accommodate soybeans. So it's a good example of farmers really putting their money where their mouth is to really provide tangible benefit to our industry.
Mike, is there anything else you'd like to let our audience in Iowa know about when it comes to current transportation issues of grain, or maybe some situations that are giving you some hope for the future?
Yeah, fortunately, we've kind of rebounded a bit from, the real dire situation with our supply chain that was, primarily during COVID. And so we certainly have rebounded a bit from that, but certainly challenges remain. And it's just another reminder of the fact that in agriculture, you can get supply right, you can get demand right, but you also have to get transportation right.
Mike Steenhoek joining us here at the NAFB Convention 2023. He is the Executive Director of the Soy Transportation Coalition. Mike, thanks so much for the time, and have a great rest of your day.
Hey, thanks for having me. Good to be with you.
Thank you once again to Mike Steenhoek for joining us on this episode of AMPM. It is time now for the Ag Weather Outlook. Overcast skies around much of the state of Iowa today. That's certainly the case here in Des Moines in central Iowa, as it's very overcast, but the temperatures are not too terribly cold, which is making this overall a fairly nice day. Tonight's conditions will look somewhat similar, and then tomorrow we will have more of a gradual clearing, but those temperatures will still remain quite comfortable. So let's take a look now at the National Weather Service and what's in store for the next 24 hours.
As you can see from the National Weather Service, increasing clouds with mostly cloudy skies today. High temperatures expected 39 to 46. For this evening, a chance for rain or snow, then mostly cloudy skies, and lows expected 26 to 31. A gradual clearing and then partly sunny skies for Tuesday. Highs expected 39 to 43. And now taking a look at our affiliate weather map for Tuesday. Cherokee becoming sunny, high around 39. Shenandoah, gradual clearing skies, high of 43. Des Moines, partly sunny on Tuesday, high around 40. Albia, mostly cloudy, then partly sunny and breezy, high of 39. Waterloo, mostly cloudy with a high around 39. Clinton, a chance for rain, then snow, then mostly cloudy, and a high around 39 degrees.
For a more detailed forecast in your part of the state, make sure and check with your local Iowa Agribusiness Radio Network affiliate. And that's going to do it for the Ag Weather Outlook. That also brings us to the end of this episode of Ag Matters PM. You can find all of our content on our website at iowaagnet.com. Also, don't forget to subscribe to our YouTube channel. Click on the notification icon there, as well as it will let you know whenever we have any new content available for you. You can also follow us on social media on Facebook, TikTok, X, and LinkedIn. And you can listen to our free podcast, which we provide for free twice daily, and you can find those wherever you find your favorite podcast at Apple, Amazon, Google, Spotify, and Podbean. From the Iowa Agribusiness Radio Network studios in Des Moines, I'm Mark Magnuson. For Riley Smith, Dustin Huffman, and Andy Peterson, we thank you for watching. This has been Ag Matters PM.